Hey there everybody! Today we're going to be focusing our attention on useless information bias, or the UI bias for short. Now, over the coming video, we're going to be asking the questions, what it actually means, how it adversely affects retail traders, what does it look like in real market terms in the real world, and most importantly, how to minimize its risk. I'm Max Norbury, let's get into it.
So what exactly is useless information bias anyway?
Now, useless information bias is essentially the tendency to value information that doesn't help you understand a problem. Now, I've seen countless retail traders all around the world using information that doesn't help them gain answers to their questions, trying to interpret information that has no actual market relevance to the asset class that they're trading. It's a huge issue.
So how and why does useless information bias adversely affect retail traders at all then?
You are absolutely bombarded every single day with various news outlets, financial commentators, Bloomberg Markets, just to name one. You know, you've got Business Insider, various social media channels that are pumping out market commentary and market trade ideas. You have signal providers, you have brokers trying to sell you their latest trade ideas. You have analysts and everything going on around you. It just creates a really chaotic perspective in your mind of what's going to do what and when. Okay, now what you need to try and do is filter out all of that useless information. You need to say to yourself, is this information going to directly affect me and the asset that I'm trading? If you're looking at something, say for example like the Euro USD, is looking at information to do with the housing market in the Philippines going to have any kind of direct relevance to you whilst you're trading that asset class? That is essentially how and why it affects retail traders. Now, if you think about it and you're looking at some economic data to do with a country around the world that has nothing to do with the assets that you're currently trading, that is going to fill your mind with unlimited amounts of noise. And so therefore it's going to change your perspective on that asset, and in turn it's going to change your bias on that asset. Whereas if you had just been focusing on news or market data that was specifically relevant to the Euro USD, for example, then your bias is going to be much more refined and detailed, and so your bias and your trade ideas are a direct result going to yield better returns and more consistency. Okay, so now you're asking yourself, thanks Max, thanks for telling us how it can adversely affect our trading performance, but most importantly, how do I minimize its risk? In short terms, everybody, you need to beware the noise. Limit your psychological exposure to outside news events. Only focus on things that are specifically relevant to that particular asset class that you're trading. Just beware the noise, okay? There is a world of influence out there, and the more you're soaking up from here and there and keep bringing these different things in, that is only going to exasperate the issue. You need to become laser focused. If you're trading the S&P 500, you only look for data that's going to explicitly define the S&P 500 and for whatever asset class that you're trading. So limit the information, limit the noise. Remember, most importantly of all, it is you and only you that are in control of your accounts. Nobody else, not myself, not him, not her. It's only you that is in control of your account and your future. So don't worry about what he's doing and what she's saying and what they're doing and what their bias is, because the only person in control of your future and your account is you. Okay, great, we've made it to the end. So in the next video, everybody, you can expect to be learning everything there is to know about loss aversion. Loss aversion is a huge issue for retail traders out there, something again that I've experienced myself personally and have been able to overcome over time. We're going to be thinking about what loss aversion is. We're going to be looking at how it adversely affects you and ultimately how to minimize its risk. So guys, hope you've enjoyed the video. Can't wait to see you in the next one. Catch you there.